Okay, so let's get started on Chapter 5, Process Costing. The objectives are going to be 5.1, distinguish between the flow of costs in process costing and job costing. 5.2, compute equivalent units. 5.3, use process costing in the first production department. 5.4, prepare journal entries for a processing costing system. 5.5, use process costing in a second or later production department. Okay, so first objective, distinguish between the flow of costs in process costing and job costing. So we've already talked a bit about job costing. We're talking about, for job costing, we're talking specifically about unique goods, small batches, and often job costing is used for service companies, such as my accounting firm. Every time somebody comes in to ask for a specific service, whether it's tax preparation or financial statement or payroll, each request is a job. So service companies often use job costing. Process costing is a series of steps to produce large quantities of identical units. The examples here, Jelly Belly, Shell Oil, and again, when I think of process costing, I mentioned this before, I think of bottling plants where you see a whole bunch of the same type of liquid that's being bottled, whether it's sodas or alcoholic beverages, just bottling plants that produce a large quantity of the same product. Here is a picture of how job costing works, where you're going to get direct materials, direct labor, manufacturing overhead, all those costs are either assigned or allocated to each job, which is going to be the work in process inventory. So each job 100, job 101, job 102, all of these are going to be maintained within work in process, but you're going to keep them separate so you can keep track of the cost for each job. As the jobs are being finished, the dollar amounts that have been assigned or allocated to each job are then removed from work in process as a credit and then pushed to finished goods. And then as they are sold, they're taken out of finished goods and put into the cost of goods sold. So in the end, the cost of goods sold is where the final resting place of all the costs associated with the cost of service or product. Either way, it's job cost. Process costs will work a little bit different now. In a process cost, rather than track by job, we're going to track by process. And the easiest way for us to relate to this is, let's just pretend that each process is a different department. And because of the nature of the product that we're producing, it generally will flow from one department to the next department to the next department. So direct materials are going to be acquired, direct labor is going to be incurred, and manufacturing overhead is going to be incurred. All of these items are then going to be assigned or allocated to the specific departments. But because of the nature of a process costing, we're going to move from department to department. So we'll start with the process costs, the first department, which will take in direct materials, direct labor, manufacturing. And you can think of this as being more linear than what this is suggesting. We're first going to start with the department number 1. And as the goods are finished, they're moved into the second process. You're still going to have more direct labor and more manufacturing overhead, but all the costs associated from the first department move to the second department. And then you're going to add more labor, more materials, more manufacturing overhead. And when you're finished with this process, you move on to the next process. Each department just moving from one department to the next department to the next department. And each time the accumulation of costs are moving from that department to the next department. Finally, in the last department, you accumulate all of the costs from the previous processes, and then you're still going to add maybe some more direct materials, direct labor, and manufacturing overhead in that last process. And when it's finished in that last process, at that point in time, the costs are moved to the finished goods inventory and into the cost of goods sold. So these are T accounts representing the items that will be credited. When you purchase raw materials, you debit the raw materials. So the debit's going to be sitting here. As you're pulling from raw materials and putting it into the various processes, you're crediting the inventory and you're going to be debiting the process T account. So this is department number 1. This is department number 2, department number 3. So all these raw materials are going to be taken out of raw materials and put into the respective departments. Now, again, if we think of it from a linear perspective, costs first go into the work in process for the first department. From wages payable, we credit the wages payable, we take all the wages, and those wages are going to be assigned or allocated specifically to each process. And the same for manufacturing overhead, assigned or allocated to specific processes or departments. The thing to remember is that this is more linear. So we're likely going to start with work in process in this department, accumulate raw materials, wages payable, manufacturing overhead, and then when we're done with this process or this department, the manufacturing process moves to the next process. So all these costs are moved out of work in process. These are the costs that were accumulated here in this process. They're taken out and pushed into the next process. But now in the next process, we're going to still add more raw materials, more wages, and more overhead. When we're done with this process, we're going to accumulate all of these costs here. We're going to credit this process for the total amount of costs when we're done with this process, and move all of the costs to date, which, mind you, these costs include everything that was put together from this process. So by the second department or the second process, you have not only the additional costs that came in from that process itself, but you're carrying all the costs that carried over from the previous process. Now we have all of these costs, and then these in sum, as we're finishing up with the process, are moved out of this process and carried over to the third work in process or the third process. And then again, we're going to add more materials, more labor, more manufacturing overhead. Once we're done with the last process, this can go on for a while, but in this case, we have 3 departments, 3 processes. Once we're done, then we're taking it out of work in process in the last department and moved on to inventory. So this is a representation of the manufacturing of a Jelly Belly. And the 3 departments are centers, shells, and packaging. So the centers, I guess the Jelly Belly has a center of some type of flavor. The shells are going to be the coating over the top of the center, and then the packaging is going to be the final process. First department, second department, last department, finished goods. When it's sold, taken out of finished goods and put into cost of goods sold. Now those 3 processes are represented here. The centers process is here, the shells process is here, and the packaging process is here. So in this example here, we're not horizontal, we're vertical, but it's the same thought process. In the centers process, we're going to accumulate raw materials that would include sugar, flavorings. You're going to have direct labor, and then you're going to have manufacturing overhead, such as depreciation, maybe repairs and maintenance, lease on the building. all of these items are going to be accumulated in the first department or process. They're going to be accumulated, and then as they're being finished, or when that process is finished and they're moving on to the next department, now we're going to add the shells, and in the shells there, we're looking at sugar, syrup. So there's more raw materials that are added to coat the centers. There's going to be more labor, and there's going to be more manufacturing overhead. Once we're done, we've got now the actual completed product itself, the actual Jelly Bellies. They're going to be moving down to the final process, which is packaging. And in this process, you'll have boxes and cellophane. Those are the raw materials. The labor is going to be the labor of the individuals working in that process or department. And then you have more manufacturing overhead. Again, added to the cost. And then finally it goes into finished goods. So we can think of it as like a snowball effect, where as you're accumulating costs in the first department, in the previous example, that was the centers department, you're taking all of that, all those costs, and then moving it on to the next department and adding more costs to it. So you can see it's growing, right? The costs are growing for that particular batch. Then you go on to the next department, you're going to add more costs to it, and then finally when it's all finished, they go into finished goods. Final costs are all added to the finished goods and moved on. Term that we want to remember, because it'll be relevant specifically in this chapter: conversion costs. Conversion costs are direct labor and manufacturing overhead. We already know what direct labor is. We learned about that in one of the first chapters. We know what manufacturing overhead is. We learned that also in the first few chapters. We're going to add those two together, and when we add them together, when we consider them together, we're going to group them, and that group is going to be referred to as conversion costs. So it's going to be important for us to remember that. We're going to be keeping track of costs in terms of direct materials, and then we're going to combine direct labor and manufacturing overhead and refer to those as conversion costs.